Okay, let's talk about gold, because right now it is on an absolute tear. It's smashing records, it's grabbing all the headlines, and it's leaving a lot of us wondering what is going on. We are not just talking about some normal market rally here, this is something else. Some are even calling it a new golden age for the metal. And get this, 38.50 an ounce. That's right, gold has blasted past that number, a new all-time high that has pretty much turned the financial world on its head. So the big question we're going to tackle is why? Why is this all happening right now, and what does it actually mean for you and for the global economy? All right, so let's get into it. We're going to take a deep dive into the powerful, interconnected forces that are pushing gold up to these incredible new highs. And just so you know, this isn't some simple market fluctuation. It's more like a perfect storm of global events all coming together at once. So, our first clue in this whole mystery is something investors have relied on for, well, centuries: global fear. We're going to look at why gold has always been seen as the ultimate safe place, the golden refuge, when things get uncertain. It really just comes down to this classic behavior called the flight to safety. Whenever the world feels a little chaotic, whether it's economically or politically, investors get nervous. So they start pulling their money out of what they see as riskier things like stocks, and they look for a safe place to park it. And for literally thousands of years, that safe haven has been gold. And check this out. What's so cool about this slide is how clearly you can see this happening. Just look at the timeline. Every time a major geopolitical conflict flares up somewhere in the world, what happens to the price of gold? Yep, it climbs right alongside that wave of instability. It's a direct visual link between rising global anxiety and gold's rising value. Okay, another huge piece of this puzzle is the US dollar. There's a really simple rule of thumb here. Gold and the dollar, they basically have an inverse relationship. So when the value of the dollar goes down, the price of gold, which remember is priced in dollars, it tends to go up. It's kind of like they're on opposite ends of a seesaw. And boom, this chart just shows you that point perfectly. See that blue line? That's the US dollar index. As it starts to trend down, just look at what the yellow line, the price of gold, is doing. It's climbing. This inverse relationship isn't just a theory. It is a fundamental driver that we are seeing play out in real time. So yeah, fear and a weaker dollar are big factors for sure, but there's an even bigger, more fundamental story unfolding here, one that a lot of people are totally missing. And honestly, this is the real game changer, the central bank gold rush. Global conflicts and inflation. They get all the headlines, right? But the biggest driver behind this rally is actually happening behind the scenes, kind of away from the public eye. And this is so significant that major players like Goldman Sachs, they're not calling this a temporary spike. No way. They see what's happening as a structural bull case for gold. What that means is they believe the fundamental reasons for gold's rise are here for the long haul. So why in the world are the planet's central banks buying gold at a record pace? Well, it comes down to a few key things. They are actively trying to rely less on the US dollar, a move that people are calling de-dollarization. It's a strategic pivot. But the real trigger? It was seeing another country's foreign currency reserves get frozen. That sent a huge signal to nations like China, India, and Turkey that they needed a secure asset outside of anyone else's political control. I mean, just look at the sheer scale of this buying spree. This chart shows us the net gold purchases by central banks. Do you see that enormous spike starting in 2022? It's incredible. They are pulling hundreds and hundreds of metric tons of gold off the global market. That creates a huge supply squeeze, and that is sending prices straight through the roof. Okay, so we've got these massive global forces at play. But what happens when they slam into a specific market, one with its own unique dynamics? Let's take a look at India to see exactly how local factors can take a global trend and just amplify it. This is a really simple but incredibly powerful idea. Think of it like a perfect storm. First, you've got the global price of gold in dollars going up. Okay, that's one thing. At the exact same time, the local currency, in this case the Indian rupee, is getting weaker against that same dollar. When both of those things happen together, you get a multiplier effect, and the price for local consumers just skyrockets. And here is the visual proof. That yellow line, that's the price of gold in Indian rupees. The blue line is the exchange rate. As the rupee weakens against the dollar, you can see how the domestic gold price shoots up way faster and steeper than the international price. It is a perfect storm for Indian consumers. And on top of all that, India has this incredible cultural demand for gold. It just surges during festival and wedding seasons. This immense seasonal demand runs into an almost non-existent domestic supply, which means nearly all of it has to be imported, putting even more pressure on those local prices. So let's put it all together. We've seen the geopolitical fears, the currency dynamics, and this absolutely unprecedented central bank buying spree. What does all of this mean as we try to look toward the future? Well, with these powerful long-term drivers in place, a lot of analysts are no longer talking about if gold will break new records, but when. The next major psychological barrier that everyone is watching is $4,000 an ounce. And honestly, that figure seems more and more likely with each passing day. So here's the crucial point to take away from all this. Gold's historic rally isn't about just one thing. It's a combination of three core drivers. First, you have geopolitical instability, creating that flight to safety. Second, persistent inflation mixed with US dollar weakness. And third, and maybe most importantly, this massive structural buying from the world's central banks. And that leaves us with one final, pretty crucial question to think about. Is this historic rally just about the price of a shiny metal, or is it a sign of something much deeper? Is gold acting like the canary in the coal mine, sending us all a warning signal about the underlying health and stability of the entire global economy?